It's been another tough week for emerging market currencies as concerns in Argentina and Turkey battered the peso and the lira. Argentina's peso crashed nearly 12% on Friday. That's despite the central bank hiking interest rates to 60%, the highest in the world. India's rupee and the Indonesian rupiah both traded at their weakest levels this year. The Turkish lira, however, recovered some ground. It strengthened after the government waived taxes on bank accounts denominated in lira to encourage savings in the local currency. Well, Michael Ingram is a chief market strategist at the corporate investment management company WH Ireland. He says tightening credit conditions as well as ongoing global trade tensions have rattled emerging market economies.
Well, today's mini rebound in the Turkish lira is really down to some policies implemented by the Turkish Central Bank, the CBRT. What they've done is they've instituted a 10% tax on dollar deposits of up to 1 year duration, and they've removed a similar tax from Turkish lira deposits. So in effect, they've made it more expensive to hold dollars, less expensive to hold lira, and that's pushed more people into the local currency and strengthened the lira. But make no bones about it, this is a form of soft capital control, and it's only effectively a short-term measure to support the currency. Certainly given the scale of the declines that we've seen in the Argentinian peso year to date, one might expect there to be something of a recovery. But having said that, the market certainly remains concerned that the macroeconomy in Argentina hasn't been stabilized, and certainly President Macri's latest comments suggesting that they need more money from the IMF in order to basically fund the 2019 budget have the markets very, very concerned indeed. So I think the issue there is that we need to make sure that both the IMF and the government in Argentina are, as we say, singing from the same song sheet, because at the moment the market's getting mixed messages and it's not liking the sound of that whatsoever. We've talked about the peso, we've talked about the Turkish lira, we've talked about the Indian rupiah. South African rand is also another currency we could talk about. There is pressure on emerging market currencies. There's no doubt about it, particularly in those economies which are running, as economists would say, large current account deficits. They need a lot of foreign money, basically to pay the bills. Those currencies appear to have been particularly vulnerable. And the two big macro themes behind that are really is that tightening credit conditions, and that's being led by the Federal Reserve in the US, raising interest rates. We've seen a somewhat stronger dollar. That tends not to help emerging market economies. And finally, of course, we've got good old, President Donald Trump threatening the established order on world trade. Trade is what has effectively built emerging market economies over the last 30 years. It's been the main conduit by which these countries have become wealthy. So the prospect of that being dismantled obviously is rattling a lot of investors, and we're seeing that played out in many of these emerging market currencies today.